Brian Grimes, your real estate mentor, back with another action-packed live session. We're going to be doing a market update today. We have a lot to cover. Banks are failing. We got 40-year mortgage notes hitting the market, just a lot of information. So make sure you stick around to the end. If you're new to the platform, like, comment, subscribe. Leave the comment that says, I subscribe. For everyone who leaves that comment, I'm going to send you instant access to my free real estate training. It'll show you how to acquire properties for pennies on the dollar all across the country. You don't want to miss out on that free offer. Guys, stick around to the end. You don't want to miss out on any game-changing info. And drop a comment in the comment section. We're going to answer your questions live as we're going through this. So you can tap into that live Q&A, take advantage of it. So I want to start off first with some updates from our masterclass members, because I get texts from you guys kind of all the time on just updates, success stories. We had one of our masterclass members who joined in December, just closed on a 5-unit deal that he picked up for $150, 150K. I'll tell you where later. I'll probably shoot an email out to you guys. But you know, $150,000 5-unit that he's picking up. It appraised for 150. He picked it up for 125. So there are massive amounts of deals all across the country, which is why we preach investing out of town. If you want to get ahead in this game, you have to learn how to invest out of town where your money goes further. If you're in a priced out market, if you're on the West Coast, and we're going to talk a little bit about the West Coast markets today as well. But if you're in some of these priced out markets, even in like Florida, down south, you want to learn how to invest out of town, how to tap into technology. If you were born today, if you're alive listening to this, you can tap into the technology that can allow you to invest out of town. Investors 30 years ago didn't have this. They didn't have smartphones. They didn't have all this technology at their fingertips. So I don't want you guys to take this for granted, right? I want you to take advantage of this so that you can accelerate. We also had one of our boots on the ground members, right? So I'm getting texts, and I'm gonna do an interview with them so you guys can hear more about their story. They're out of Texas, a partnership, and they just picked up two $100,000 flip deals in South Philly, but 2 projects on 1 block. So it's going to be very exciting to document, take videos of it, and kind of follow that process. But in a hot pocket, one of the top neighborhoods in South Philly, that, you know, these deals usually flip in 20 days, you know, on the market. And they just put both under contract on the same block. So they're going to get the economy of scale in this development process. Of course, we're going to build the house for them in the Boots on the Ground program. If you guys want to learn about that, you know, you have to reach out to me to talk about that on a one-on-one Zoom. But it's just, you know, the results are massive. And we were just talking on Friday, believe it or not, about trusting the process. Trusting the process, it means you might be looking for a deal for 30 days and you're getting no traction. You're doing everything. You're pounding the phone, you're taking action, you're tapped into the course, you're learning all the knowledge, and you're just like, it's not clicking, it's not coming together. And we were talking, and I was just like, look, this is the process. This is what weeds out the diehard fans, the diehard real estate people from the weak, from the people who would rather trade crypto or go do something else and don't really love real estate. So real estate will test you to see if you love it. But if you stick with it on day 31, day 32, you could land that $100,000 flip, or that buy and hold that's going to cash flow you $1,000 a month for the rest of your life. And you will forget about the 30 days where you felt like nothing was moving, where it wasn't working. So you just have to stick with this process. What I've seen in real estate is that even the people that are bad at real estate, if they stick with it, they fail forward. They get the result every time. Real estate rewards the people who put in the work and stick with it. So just make sure you guys stick with it. Kendall, you want to tap into the ride along? I wish you would have tapped into the first one. We're probably going to do a ride along in Philly for those of you out there who want to do ride alongs with me. And then I want to get into these market updates, but we just got that question. When's your next site visit? We're going to do a Philly ride along sometime this summer. I'm still working on it, but if you guys are interested, tap in, because like reach out to reserve a seat, because I'm only going to bring, 10, 12 people with me. I'm not going to bring 30, 40, 50 people with me. I want a tight group where we can spend a lot of time one-on-one. I can walk you through these deals, really educate you guys as we're traveling around the city on the party bus, learning about the ropes, kind of where the deals are happening. So Kendall says hashtag regrets, but he's still waiting and ready to go. definitely tap in. The last time we had a ride along, we had people from all over the country tap in and fly in to tour Philly with me. We have a bunch of projects going on. We have projects where we're blowing the roof off, building up a third level, blowing the backs of houses off. We're doing all the craziest, development projects, and people are having a lot of success making money. So you guys definitely want to tap in. Lexi said, I'm from Philly. Would like to connect. Definitely connect. Reach out however you got here. Shoot me a text, email me. And if you want to tap into the Philly ride along that I'll be having, definitely tap in there. So guys, stick around to the end, but lots of updates, lots of success stories. I'll keep interviewing the people who are having success because I know you guys have questions, and I kind of compile those questions and then just ask it to the people who are having lots of success with the mentorship program and with real estate in general, and put that on the YouTube channel for you guys to consume, and see if this is going to be something for you, because I tell everybody you could be next and you will be next. And one of my newest boots on the ground members, this 2-person team, and this is a female team, two partners, they're getting it done, $200,000 flips, and I love seeing that too, because a lot of the women who invest in real estate, they feel like, oh man, like I don't know if I can do this, because or am I going to be respected in real estate? Can this work for me? This can work for you. This can work for you. And my mentorship program can work for you. I've seen it work many times, and we have a good balance between men and women in the mentorship program. Everybody's having success. I would say it's like a toss up between who's having success or more success. So definitely stay tapped in, guys. Let's get into this market update. I want to touch on a couple of things, and then we'll jump into Q&A. Once again, ask any questions you guys have, and stick around to the end. Because you don't want to miss out on learning anything, or even learning from somebody else's question. So let me move that. And so let's talk about some of these weekly housing trends. This is kind of the freshest data that we have right now. This is from like last week. So from just tracking the market, and this is from Realtor.com. They do these weekly updates. Here's what they found. So the median listing price continued to rise, clocking in, let me blow this up for you guys, 6.3% higher than last year. So growth in the typical asking price of for sale homes steady, matching last week's pace, which was the lowest since June 2020. Mortgage rates are an important determinant of where home prices will go, and the outlook for mortgage rates has gotten considerably cloudier as financial unease in the wake of the recent banking failures compounds the existing uncertainty. And you guys know that the banks have been failing. If you don't know that, you should. You need to continue to watch the news and stay on top of this. But several big banks have failed. This started with Silicon Valley Bank, and they failed because the Fed was boosting rates so fast that they weren't taking into account. A lot of these banks hold bond portfolios. So when a bank gets a big sum of money, they don't just park it like in a safe like they do on like the movies, and then somebody comes in and robs the bank, cracks the safe, and takes all the money. They take that money, they invest it in bond portfolios. But what happens is these bond portfolios pay an interest rate based upon current rates. So when rates are extremely low, those bonds are paying a low rate. As the Fed doubles rates essentially overnight, the existing bond portfolio, because it's paying off smaller rates based on where rates were the last 10 years, those portfolios went way down in value, and they just kind of flatline. So it caused billions, hundreds of billions of dollars worth of losses, and a few banks had to be bailed out. Now, this has been hypothetically good news for us as buy and hold real estate investors, as people who like to do that burst strategy and go out and find deals that we can buy, renovate, refinance all of our money out of, and then take that same money and recycle it into another deal and just keep printing properties. We like some of this news because what it's doing is it's causing the Fed to become more dovish. And dovish means they're not going to keep jacking rates as high and as fast as they've been doing it, because there's a consequence now, and they're looking at right in the face. It's not just all about inflation anymore. If they keep jacking rates and they don't allow banks to adjust to do it over the course of time, more banks could fail, and we can't bail out everybody. So the Fed is going to have to take a closer look at this. They'll probably, instead of the projected 50 basis point increase, 0.5%, it might be like 0.25%, which we'll know this week. We'll know this in a couple of days. So That's just one of the things to stay tapped into. But banks have been failing. More data, new listings, a measure of sellers putting homes up for sale were again down this week by 18% from 1 year ago. So new listings, properties hitting the market are down. Why are they down? Because interest rates are higher. And as interest rates get higher, I was just literally talking to a buddy of mine. I went to his son's second birthday party Sunday, and he's talking about his property and thinking about what should I do with this property, but he's also concerned like, well, rates are high, so if I sell this, then I got to go get into a higher interest rate. So everybody's thinking like this. Everyone who owns a property right now, even if they would sell and they have appreciation, like their property appreciated $200,000-300,000, they're now thinking, well, if I sell, what am I going to buy, and then what's the rate going to be on that? Because a lot of the people who are sitting in properties right now are sitting on 2-3% 30-year fixed mortgages, and they do not want to jump into a 6 or 7% mortgage. So there's a lot of that in the marketplace, and a lot of people thinking about that. But that is the reason why the inventory that is hitting the market is down. It's down 18%. This is also good news if you're a buy and flipper, which a lot of people ask me. Can you buy and flip in this market? Are prices going down? Prices are pretty stable, but having inventory be low, is a good thing for a flipper, because it means there's not a lot of new inventory for people to tap into, because people aren't selling their houses. So if you're going to buy shells and full gut renovate them and put them on the market, there's not a ton of inventory, which means not a ton of competition for your product. So it's actually a good time to flip and to cash in on these higher prices still. Okay, so for you buying flippers, it's still pretty steady. Active inventory growth continued to climb, with for sale homes up 61% above 1 year ago. Now, you have to take that with a grain of salt, because 1 year ago we were still coming right out of like COVID and kind of that shutdown stuff. So the inventory is climbing on existing properties. The existing inventory, from what I see, is shells. It's these properties that developers like us, what I'm trying to build you guys into, can go in, negotiate people down on pricing, and do a full gut renovation, and do a burst strategy deal, or do a flip deal, or even a cosmetic renovation into a flip. So there are a lot of properties, the ones that aren't move-in ready and that need renovation, some of them are just sitting because there aren't enough developers out there with the skill set who know how to go out and evaluate those deals, make the proper offers, have the persistence, and have the lending in place, like the 100% lending that I tap a lot of you guys into. So for us, these are like perfect conditions for us to get these deals, which is why some of the people in the Boots on the Ground program are locking up deals that they can flip for $100,000 that are essentially sitting on the market for longer than they otherwise, would, sit on the market for. Let's keep flowing through this, and then I want to get into these 40-year mortgages and kind of what that means for us. Home spent an extra 18 extra days on the market compared to this time last year. So for 32 weeks, homes on the market have been for sale longer than was a typical 1 year ago. So properties are sitting on the market longer. People think about it. It's normal for a property to sit on the market a little bit longer today than historically it would in a market where rates are like 3 or 4%. But what you're going to see is, as rates go back down, people are going to start diving into the market in droves and buying these properties. They're just waiting to see. People like me know rates are going to go back down. They're going to be like in the 5% by the end of this year, early next year. And there's just going to be this window, and we're just ahead of the curve. And you guys should know, if you're staying tapped into these market updates, staying tapped into the channel, or if you're in a mentorship program and you're just locked in on this thing. But some of the people who are sitting on the sidelines, they're like a little bit more cautious, a little bit more hesitant. So they're not getting into the bidding wars or jumping the gun on offers. They're kind of waiting it out. If the interest rates pull back 1 week, they'll dive in and buy a property. If the interest rates are going up this week, they'll kind of sit and wait. And that's part of the reason for that, additional 18-day sitting on the market. So guys, if you're new to the channel, like, comment, subscribe. Leave the comment that says I subscribed, so I can send you instant access to the free training. It'll show you how to acquire properties for pennies on the dollar all across the country. You don't want to miss out on that. Drop your comments in the comment section. Drop your questions here so we can answer them live. If you guys have any questions about any of this stuff, or even anything we're not talking about, anything real estate related, I want to answer your questions. Let's get into these 40-year mortgages. So the HUD issued a final rule, and this was recently, this was like 10 days ago, to offer 40-year FHA loan mods. So what are these loan mods? These are loan modifications that would increase the maximum term limit to 480 months, which is, a 40-year note. And this allows mortgagees to further reduce the borrower's monthly payment, as the outstanding balance would be spread over a longer time frame, right? So it is what you think it is. It is just extending the mortgage. Who is this for? This is for people who are currently delinquent on their mortgage. So if you have a FHA or Fannie Freddie backed loan and you've been delinquent because of COVID, because of eviction moratoriums, you're not collecting your rent, or whatever the reason is, for these people, you can now call in to your lender and try to renegotiate that for a mod. You can extend all the past due balances. You can get that added onto your loan and then get it all stretched out over a 480-month term. So what that's going to do is reduce your payment substantially, right? So it gives you relief on the monthly payment. This is very strong. What this is, to me, is an indicator that what's coming next is a true 40-year mortgage, a 40-year fix that you can just get fresh. Like, you don't have to be in distress. You don't have to have an existing loan. 40-year notes. This is like the precursor. I would say in another 6 months, the market's going to wake up to this. And I think this is kind of the test of, hey, we're going to put 40-year notes out there, see what the demand is, see how many people use it, see if it can work, see how the underwriting looks, see what the interest rates on it are, put out some marketing tests, see how many people we can get to sign up. And if people start signing up, which I think people will, they're going to put this out in the market. Now, there's kind of a mixed sentiment here. There are some people that look at this and say, well, a 40-year note, people are going to be locked into these things for the rest of their life. You sign up for a mortgage when you're 36, which is the average age of a first home buyer today, which is a little late, probably. Historically, it's very late. Most people, I think a generation ago, were buying properties in their 20s. Now people aren't buying until they're in their mid to late 30s. So, you're going to be in a mortgage until you're 76. It's kind of like your life expectancy, right? But as an investor, if you're using this for an FHA house hack, you don't really care, right? You're getting this to put the lowest note on it on a fixed term. So if my payment can go from $1,000 a month to $700 a month, it's just more cash flow in your pocket every month. You're going to put tenants in this property and cash flow it, hopefully for the rest of your life. So it doesn't necessarily matter to you. So as an investor, this is a tool that you can use in terms of a 40-year fix that's going to give you more leverage. It's going to allow you to generate even more cash flow, even in a higher interest rate environment. So while I'm not expecting rates to be that much higher for longer, they are going to tick back down. They may never see 2 or 3% again. They may, but they may not. If they get back into the fives, which they will, cash flow will be there even on 30-year notes and in an abundance. But these 40-year notes could unlock even more cash flow. And there are places, not in this country, in the US, but in the world, where they have like 50-year mortgage products that are unrolling. So I think this is something that is here to stay. For those who know how to use these as a strong investment tool, you're going to be able to make a lot of money. You're just going to be able to flat out make a lot of money. And you guys want to keep your eye on this, because this is going to continue to evolve over the course of time. We're going to see more 40-year products just rolling out, probably even on conventionals, not even on FHAs, and then on even commercial products, portfolio loans, asset-backed loans where they're just looking at the DSCR, just looking at the cash flow. You're going to start to see this stuff. If you guys have any questions, drop them in the comment section. We will answer your questions live. And leave a comment that says I subscribe, so I can send you instant access to that free real estate training, show you how to acquire properties for pennies on the dollar all across the country. You don't want to miss out on that free offer. Let's get into some more updates. Philly's had some crackdowns on Airbnb's short-term rentals. I was in Philly recently and talking to a guy who, like, all he does is Airbnb. And we were talking about New York, kind of how they cracked down in New York January 1st. And he's like, yeah, they cracked down in Philly pretty hard too. So he's been feeling it on his end. And he's even talking to me now like, hey, are there ways to get into kind of what you're doing and, other investment strategies and co-living and all the stuff you teach in the 100 Keys Masterclass? And I'm like, yeah, I mean, that's why I swear by this stuff. If you guys haven't seen my Airbnb bust video on the YouTube channel, definitely go watch that. But there's a crackdown happening, even in Philly. It's going to happen more. But what is happening? The new short-term rental regulations, which took effect January 1st, build on rules that have been in effect since 2015. So some of these requirements have been around, but they haven't really been enforced. Now they're being enforced. So the changes include mandating that rental hosts who live in their units obtain a limited lodging license, even if you live in the property. We're not talking about like a pure rental. While relatively inexpensive, licensed applicants must ensure their unit is up to code and meet current zoning regulations, among other new requirements. Now, what that means is they're going to send in a city inspector. So once you apply for this license, they're now going to send in a city inspector who's going to walk your property. And if you have things like doorknobs on the property with little key codes, and your property is set up in a way that they think is not up to code, which there are a ton of properties that are not up to code, by the way. I actually have a story where a guy goes to buy a duplex and he pulls a permit. Which he shouldn't have done. He should have done it, but he shouldn't have done it, I'll say. He pulls his permit and he's going to do a cosmetic renovation. He's like, hey, I'm going to TLC the flooring, put in some new cabinets, and he's trying to be like a good Samaritan. So he pulls the permit and it's for like $10,000 of work. And that's how he budgeted this deal. Like, I'm going to buy it, put in 10K, put some tenants in, cash flow, great deal, right? So he pulls the permit and the inspectors are like ruthless right now for some reason. So they come out and they're like, well, this is a duplex. So now that you pulled the permit, we need you to bring the whole building up to code. See, this staircase is only 30 inches wide. So now I'm going to need you to widen that to 36 inches, which means he's got to cut into the joists, widen the whole staircase, and then shift walls. And then they want him to put a sprinkler in the building, and they want him to update the wiring and the plumbing. And before you know it, this guy looks up, he's in a $200,000 renovation. And he's just, I mean, the deal's not even worth that much. So now he's upside down, all because he pulled the permit and brought the city in. This is what happens, or can happen, when the city comes in and is trying to bring your property up to code. They're going to throw the book at you. And now you have to do it, or you can't use the property in that way. You could run into an issue if you do this like this guy on a two-family, and now they want you to put a sprinkler in the building. They might say, well, it doesn't even matter anymore if you're doing Airbnb. Now we're going to put violations on your property and you have to bring it up to code. So this is a way where the city is now just kind of coming in and they can dig in your pockets in a major way. I hear all these stories. You guys don't. But these are these are the nightmare situations. I've lived through it over the course of doing hundreds of deals. So I kind of know. And the first thing I said to my guy was, well, why did he pull a permit? He's just going to put some cabinets in and TLC the floors. Why was he trying to be a good Samaritan? No good deed goes unpunished. So, he he learned a valuable lesson. I bet he wishes he was in 100 Keys Masterclass, because I would have just told him, you're not doing a heavy renovation. Don't pull the permit and just TLC it. But, to each his own. You live and you learn. And this is side note, kind of speaking on the value of mentorship. Some people will ask me like, well, what's the value of mentorship? This is the value of mentorship. He could have paid maybe a couple of hundred or a couple thousand to have content or access to somebody who had done this before, who could have guided him through that. Now he paid $200,000 for that lesson. So he could have paid, let's say he could have paid $2,000 for that lesson. Now he paid $200,000 for that lesson, 100x. That's the value. It's almost difficult to put value on good mentorship, on somebody who's kind of been through this stuff and lost that type of money. you can't really value it properly unless you understand all of the risks and pitfalls of investing in real estate. So even if you were like, I'm going to be conservative, I'm going to do Airbnb because you can do arbitrage, and you could still run into this type of issue because you don't understand construction. You don't know how the cities work. You don't know how inspectors work. You don't know how pulling permits work. And you're trying to be an investor. You're trying to shortcut the system. Real estate is not that game where you can just jump in and figure it out on your own and go at it. You better have a lot of money. You better have $1 million to do that. And you're going to burn $500,000. And it's boneheaded to burn $500,000 when you can go out and get the knowledge, especially today with the technology that's available today and the resources you can tap into today. It doesn't make any sense. I'd rather you just take the $500,000 you're going to lose, or the $200K you're going to lose. That guy could have went and purchased another 4 or 5, maybe 10 properties with 200K and some hard money. He could have purchased another 10 properties. He could have done 10 bird deals, got all of his money back, did it again. But he wanted to run on his own. So now he's learning from the school of hard knocks. And the school of hard knocks is unforgiving in real estate. This is not that game. I promise you, like, this is not that game. It's not always a contractor burning you. It could be an inspector ripping you, or the inspector's just having a bad day and he just wants to trash your deal. So you really don't know what can happen until you go through the ropes. But as somebody who's been through the ropes, you can avoid a lot of this stuff with the right knowledge, but you have to know what you're doing out here. Here's a question. Could he have sold the property as if he didn't want to put in the 200K? Well, not really, because now there's a violation on the property. So even when he goes to sell the property, now he's selling it with a violation on it. And he's got to now find an unsophisticated buyer. So now he has to go find somebody else who has no knowledge of real estate and then rip them off to get himself off the hook. So he can go sell it to them. But whoever buys it, the violation doesn't stay with the previous owner. It stays with the property. So now they have to go in. And execute on this deal and put all this money into this deal that is not worth it. So there's just a lot of drama, right? So he ran into an issue that now he has to solve. Even if he tries to sell it, it's public record now. So now he's got to work his way out of it. So he just had to bite the bullet and burn through 200K. If he had it. If he didn't have it, I didn't stick around to hear like the whole end of the story or how it evolved. From my understanding, he's in it now. Like, he's still actively dealing with this. But this stuff happens. This stuff happens all the time. And you never hear these stories because, one, you guys don't talk to as many people as I do about real estate, and as many professionals who are moving and operating within like hundreds of deals. Yeah, we got an ouch. Yeah, that one hurt. That one hurt more than the general contractor to rip me off for 40 grand. That hurt. That was an ouch. But 200K, that'll knock you out of the game. That would have taken me out of the game. I might not be here today had that happened to me in an early on deal. Yeah, I just might not be here because that's a lot to recover from. I think this guy might have the pockets to recover from it, but it's a setback. It's a boneheaded play. 200K. You know what any of you guys could do with 200K? Anybody watching this? What could you do with 200,000 in terms of investing? For a lot of you, that would be enough to break free from the rat race, jump into real estate full time, and you never look back. You never have to work another day of your life in a 9-to-5 for anybody. You be rocking this 9-to-5 crossed out, 24/7 cash flow. You be rocking this, and just kind of living life on your own terms. 200K mistake. So this is the value of mentorship. There are $200,000 mistakes out there on one deal, on simple deals, on Airbnb strategies, arbitrage plays, where you think you're safe, and you're not. You don't know what you don't know. You don't know about the unknowns yet. I do. People in the 100 Keys Masterclass do, because I'm putting all those unknowns, as many as possible, in the course content. And then as you're going through deals, guiding you through it, pointing you back to it so that you don't make these mistakes. Even things like what clauses to put into your real estate contracts. That's how you kind of stay ahead. You got to put the right clauses in your contract so that you don't get burned. How can you seek violations on a property. So like, how can you see them? How you can see violations on a property, it's all public record. So there's two ways. One, you can just go on a website. In a place like Philly, you can just go on the website, Philly Atlas, and you can see all the violations on the property going back to 1920, right? Since they like built the city. I can see everything. Now, in a place where you couldn't do that, you could just pick up the phone and call the city, call the municipality, and you would call the construction division and they say, hey, this is Brian. I'm looking to buy, 123 Main Street. I just wanted to confirm the zoning. I wanted to confirm if there are any outstanding violations on the property that need to be resolved. That's the question. And that's the division. Call license and inspection of the municipality. Call the construction division. You'll be speaking with the head of whatever that division is, or somebody high enough up that has access to the internal server that can tell you this information. And then you have your pen and paper ready, write down the violation numbers, and you can resolve them. Some violations are no big deal. Some violations are like, oh, they didn't pull a rental license, and all you got to do is pay the $200 fee and pull a license, and it's like, cool. But those aren't the ones you're worried about. And when you're new, you can get burned. I don't know if I've told this story on one of these, but I had one deal. This is a funny story. So I had a property collapse before. Like, hey, the wrong wall got taken down, property just tumbles, right? And that was pretty crazy. But it kind of had me learning more. And I started buying properties off of the sheriff's sale. And some of these properties would have things like, there would be a tree and it would just grow straight through the property, straight through the roof. And water, when it rains, just goes all the way through the property and it would weaken it. And these properties, once the inspectors get word of them, they find out about like the property's condition. They put it on a demolition list, on a city demolition list. They say God isn't making more land. The city's making more land because they're bulldozing houses. They're opening up land lots. So more land is being created for people who are doing ground up development in major cities all across the country every day. But these properties will end up on the list. And if there's a hard rain the night before, the city gets nervous and they start bulldozing more houses, right? So I'm going to buy this house from this guy, $9,000. He's a wholesaler. He got it off the sheriff's sale. So I'm like, cool. We put it under contract. We're coming to the table. And this thing is just the four walls. There's not even a roof on the thing. We get to the table, but I've set up a system now where before I close on anything, I send a guy. And at this time, I probably have 10, 12 boots on the ground, people that I could send that are just free roaming the city, just running, inspecting properties, doing all of this stuff. So I text my guy, I'm at the closing table. Hey, swing by there, send me a video. He's like, cool. 5 minutes later, boom, I get a buzz on my cell phone. I pull up my cell phone. It's just some dirt. And I can see literally like the bricks that got like kind of plowed over. They're like halfway out of the dirt. There's like a window that's halfway sticking up out of the dirt. And he's like, bro, it's gone. And I'm looking and the seller's there. I don't always do closings in person, but I did this one, like I'm in Philly doing the closing. The seller's sitting across from us. And I just show him the phone. I'm like, bro, it's dirt. Like we're not closing. But had I not had that knowledge, I would have closed on this deal, right? I would have stroked this guy a check. I think he was going to get paid. He paid $9,000 for it. I was going to pay him maybe $25K for it. So it was a wholesale deal for him. And I would have just had a $25,000 plot of dirt that wasn't worth anything, right? Had I not had the systems, had I not had the knowledge that this stuff happens and how it works, and that this was on the demolition list and that it could happen any day, and that it rained hard the night before and you better check. But this guy who was selling it, he was new. He was a wholesaler. He didn't really know. He didn't know about the demolition list. So he got burned. So he's looking at me. He's like, well, what are we doing? I'm like, keep the deal, bro. I don't know. And he got burned for $9,000, right? He couldn't sell it. It wasn't worth anything. It wasn't even worth, as a plot of dirt, $500. Well, maybe it's worth $500, but to the right person, right? So you got to have the right knowledge. Will violations come up on title search? No. Title search, what they're looking for is the property being free and clear. How's that property going to transfer from the seller to the new end user, to the buyer? So they're checking for liens on the property. Now, a property could have a lien on it, like, hey, somebody didn't pay the water bill, somebody didn't pay the gas bill, and it got attached to the property, or somebody didn't pay the property taxes, or there's these other mortgages, or there's this IRS lien, or they got a lawsuit and that got attached. Those things can get attached to a property and they need to be cleared. But outside of that, no. Violations are something that only you can research. So if you don't know how to research them, you shouldn't be investing in real estate. That's what I'm here to tell you. You shouldn't be investing in real estate if you don't know how to screen for violations. If you don't know that these things exist, some of these things I'm talking about right now, this is just tip of the iceberg. If you don't know this stuff, you shouldn't be investing. So, but title will not do this for you. They will not save you. In fact, your realtor doesn't even know about this stuff because they don't really get into that most of the time. They're really concerned with the title clearing. The title's clear, you can close, they can get paid. They can get their commission check. And that's, I'm not gonna trash any realtors. That's not what I'm here to do. But that's about as far as they have to think, because it's just like, well, they're saving you from a free and clear deal, but they're not, a realtor is not an investor. They're not here as a crutch for you as an investor. They're a realtor. Their job is to make sure that you're getting the property at the price you want, that they're negotiating terms, that they're, processing the paperwork and smoothing out the transaction. That's their job. Their job is not to know how much the rehab is going to cost, hook you up with contractors, screen for violations, or do anything of the sort. So just making sure that you guys stay on, on top of that stuff. But, if you're in a 100 Keys Masterclass and you're in the one-on-one VIP program where we're working together, this is what I tell you guys. Like, when you go under contract, send me the deal, take a video of it so that I can look into it. And then we can kind of talk about some of this stuff before you run into some of these pitfalls, because they're out there, and these things, they hurt because it'll blow your budget. It's the thing, they say it's the punch you can't see that knocks you out, right? It's the violation you can't see that blows your budget. Those issues, they're gonna crush you. What's the fee for the 100 Keys program? Just got to tap in. You guys know that. You got to tap in, reach out to me offline, shoot me a text, email, and we'll talk one-on-one about the cost of the mentorship program and how you can get in, how you can get involved. So definitely just reach out. Same question, minimum funding needed for the boots on the ground program. It depends on your strategy. Like, it really does depend on your strategy. I would say for boots on the ground, you definitely want to have, like I tell people, for a cosmetic flip deal, this isn't even about boots on the ground, right? This is just about if you're going to go out and try to execute on a burst strategy deal. You want to have, like, I would say 30K of liquidity. It depends on who you're using though, right? Because we can tap you into 100% lenders that'll give you 100% of the money to acquire and renovate properties. So then, depending on the size of the deal, if you're doing a small deal, you can get away with much less money. You could probably start off with 20K and some credit cards. If you're starting on a bigger deal, like, hey, I want to go flip a $500,000 triplex or do a burst strategy on a big deal like that, you might need like 50K, some credit cards. You don't need a ton of money though. Either way, for a lot of you, you could partner up. And I don't like partnering up, but if you're going to do a deal, like one deal and a flip, you're not necessarily like, I'm going to partner up forever with this person and build, some company. But if you want to get together on a deal, kind of team up, put your heads together, do a flip, get some experience, tap into boots on the ground or tap into, mentorship, that's not a bad way to get started, because you'll get all of the knowledge, experience, and then you can kind of take that and go on your way. But that's what I would say when you're getting started. If you're going to do a house hack, you probably only need 10K, but I still say to have probably 20K. If you watch my most recent video, I broke down like how to break free. And this is how I broke free. I learned how to save 20 grand. I did whatever it takes, work side jobs, side gigs, side hustles, whatever it takes $20,000 is $1,600 a month. $1,600 a month for a year. You have to figure out how to save $1,600 a month for a year. Keep it small, break it down into increments. $400 a week. So you got to figure out a side hustle or something. Do that for a year. Once you have your 20K, you can now deploy that into real estate and get a deal. And then you can recycle and repeat and keep doing that process. And you will hit your numbers. Within 2 to 3 years, you could break free from the 9 to 5. You can cross out that 9 to 5 job. 2 to 3 years of that type of focus. That's it. So you will either give yourself 2 to 3 years, or you will give the 9 to 5 20 to 30 years, maybe 40, until you're almost dead. And a lot of people, unfortunately, I still talk to some people who are well into their, almost 70s, and they're still like, man, I got to get into this real estate because they can't retire because the 9 to 5 didn't do it for them. So I'm helping them to put together, game plans to break free from the 9 to 5, or just from that, check to check with the real estate so they can retire. Had they put in the 2 to 3 years into the real estate in the 20s, 30s, 40s even, they would have been done, because that 2 to 3 years will get you over the hump to the point where you can get 20, 30 properties, bring in 10, 20, 30,000 a month, and just be done. So that's what all of this is about. That's what all of these lives are about. All of the videos on my YouTube channel are about. Anything I talk to you about, the 100 Keys Masterclass, the Boots on the Ground program, it's all about building you up to that level where you can do this full time, cross out the 9 to 5, and accelerate. Period. That's what it's about. But it's only a 2-year to 3-year push. And the number is learn how to save $1,600 a month. Period. That's a skill, by the way. That is not an income goal. That is a skill set. Notice how I'm phrasing it. Learn how to save $1,600 a month. It's literally something you will learn how to do, and then you won't be able to unlearn it. Once you do it once, guess what you just learned how to do? Save $20,000 a year, pretty much every year. So as you keep doing that, let's say if you save $20,000 a year for 3 years, that's $60,000, and you put it all into real estate, that would produce cash on cash returns and more cash flow. And then the cash flow allows you to do what? Save more money faster. So you can save $20,000 instead of in a year. Now you can save it in 6 or 8 months. And then as you get more cash flow, now you can do it in every 4 months, 5 months, you can save 20K instead of every year. So that time frame shortens, and you keep deploying the money, and you just get more and more assets. That's the game. But you only need to learn it once. You need to learn how to save $1,600 a month one time, and then consistently do that for a year, and then maintain that, and then deploy your money into real estate, and just stay locked in on that. Just keep it really small. Don't think big yet. And if you keep doing that, you will get what I call the exponential growth. If you've ever been in like algebra or some of these classes, you'll know that they have like curves. Or if you're in like a statistics class, the curve goes like this. It's called exponential rate of return, exponential growth. It's not a straight line. We think in straight lines, but in real estate, your trajectory, it goes like that. It starts off small, and then that curve gets steeper and steeper as you advance in years. So by year 3, you start to take off. So you'll do two deals in year 1, 3, 4 deals in year 2. By year 3, you might do 16 deals. Like, it'll look crazy. So just stay locked in. Is 100K enough? 100K is more than enough to get started. I flipped 100K into a 300 property portfolio in 5 to 7 years. And now I'm giving you guys all the knowledge from that decades plus worth of experience and 300 deals worth of experience, which means you could take your 100K and apply the knowledge and do like my one guy in out in Arkansas, one of our masterclass members. He, in his first deal of the mentorship, he did 10 ground up deals. And now in year 2, he's taking the knowledge. He's building a whole 30 property development. Bought a couple acres. He's got plans to build a 30 property development project, all ground up. Like, so you guys can get bigger than, even what I did. And that's the goal for you. I'm not hiding back, holding back or hiding the information that would prevent you from going out and even doing more. So there are no limits. But with 100K, yeah, you can flip that into a multi-million-dollar portfolio, break free from the 9 to 5, and be fully retired in not too long. Can you help with income goals? I mean, definitely. I'm still a certified financial planner. For those of you who've taken the time, which I put all of my podcast interviews are on the YouTube channel. There's like a section for all the podcast interviews. It might be 30 interviews now, and there's more. I'm doing one Friday. I'm probably doing 4 this month. People keep pulling me on their platforms. I'm a certified financial planner. Part of my background, I worked at a boutique firm where we manage money for multimillionaires. We manage 1.4 billion for about 300 privately wealthy families. So, I've got to sit down with multimillionaires and manage their money and help them with their asset protection. And, I definitely incorporate that into what we do with our 100 Keys Masterclass members. You guys know on our first Zoom call, for those of us who've had that and who are in, I'm asking you, financial questions, risk tolerance questions, and trying to get that information out. That's why, because it's part of my natural background as a financial planner. It's kind of built into just how I operate. I want to quit in 2 years. It's all possible. It's all possible. I'm giving you, go watch the last video I posted on the YouTube channel. It's giving you the whole game plan to get out. It's giving you the whole recipe to break free. It's giving you the whole thing. But the 100 Keys Masterclass has the mile deep, in the weeds, in-depth info that's going to allow you to accelerate faster, as fast as humanly possible. And I will never tell anybody to do something that I wouldn't do or that I haven't done. This is, what I've done. This is how I've made this happen and made these transitions without the knowledge, without the mentorship, unfortunately. So I had to go get burned. I had to lose big money. Even though I'm talking about this guy's 200K, you guys can just do the math. If I lost $5,000 per deal on average, which I probably have, in mistakes, and did 300 deals, that's 1.5 million, right? That's a lot of money. So I've lost more than this guy, this 200K guy. Maybe that's not his only mistake. Maybe he's lost more. But, on average, in order to get a lot of knowledge, you got to lose a lot of money, or you have to just tap into mentorship and learn from somebody who's lost a lot of money. It's much better to just learn from somebody who's lost a lot of money. You can become me doing it on your own. If you survive that many losses and that much in losses, you will be fearless. So you'll have that, notch to wear on your belt. But you can become fearless just by doing it the right way, not making mistakes, but understanding the game and just having success. And then you'll become fearless. You're gonna become fearless anyway as you survive the game. You don't have to lose a ton of money. The best thing I did was I started small and I was very conservative. So my first deal is still my best deal ever. My first deal. And that's because I took 2 years of studying before I ever did that first deal. I took 2 years of studying and reading whatever I could, running numbers, and I had a financial background. I was an econ major, so I had something to rely on. And I invested in my backyard. And I had my mentors and I listened to my mentors. They weren't all over it like I am with you guys. They weren't really like giving me the X's and O's. But from what they were giving me, the small principles that they were giving me, I stuck to them. And they said, if you just do this and stick to this, you'll be successful. So I stuck to it, and it saved me. It protected me. And I went turnkey. I didn't do any renovation on my first deal. But for those of you who really want to get into this game and the renovations and all of that stuff, you need to learn. Or you're going to pay either way, is what I'm trying to say. You don't have to pay for mentorship, but you're going to pay. You're not going to not pay. You're not that special butterfly who's going to not pay. You're going to pay either the School of Hard Knocks or mentorship. You choose. And it's up to you. You can't hurt anybody but yourself. You don't hurt a real estate coach by not joining their mentorship program. You will only hurt you. You're because you're going to pay either way. And the mentor knows that. They're just like, well, they don't get it yet. They think the grass is greener out there. They'll go hit a violation and then they'll pick up the phone probably after blowing. Like that guy, after blowing through 200K, he might have picked up the phone and been like, yeah, I need to figure this thing out. I can't do this again. Brian, I'm trying to be done with my 9 to 5 within the next 2 to 3 years. Yeah, we're going to make it happen, Wes. We're going to make it happen. We're getting started. We're tapping into the down payment assistance, everything we can tap into. tapping into that, taking our time with it, and we're gonna get you out of this thing. And the cool thing about Wes is he's young, man. This guy's like in his early 20s. He's gonna be retired fully before 30. So he's gonna be driving around just chilling. And it'll be funny to watch some of you guys live that lifestyle, because it's a weird lifestyle when everybody else is working a 9 to 5 and you're like up, kind of working out, kind of like just doing your own thing, living life on your terms. It's not a lonely walk, but for some people it is. For people who are really into self-development and just building their empire, there's nothing lonely about it. You get to spend 100% of your time building your empire, but it's different. Like, it's really different because very few walk that path. Dr. Glock said, "Get out the matrix." Like someone said, let's aim to get some cash saved up and get some deals under our belt. That's it. Save up some cash, get some deals under your belt. Save the money, invest the money, save the money, put the money in a separate account. Put the money in a separate account. The purpose of the account is to invest in real estate, and that's it. It's not to go on vacation. It's not to buy anything. It's to invest in real estate. It's to build cash flow, build more money. So now you have this living, breathing account that you save and you add to, so it grows, and then it only invests in things that continues to grow the money. So now your money is working for you, and you're making money even while you're sleeping, which is rare for a lot of us. We're not thinking on that wavelength. So that's what you have to be locked into. That's your only purpose. I don't care what job you're working, what you're doing right now. The 9 to 5 is your partner. It's there to build up income so that you can take that income and pour it into other stuff that's going to build more income and break you out of the 9 to 5. Don't be pissed off at your job, your boss. Get ahead. Get ahead. They're giving you the money. You got to learn how to keep it. You got to learn how to keep $1,600 a month and be able to put it in a separate account, live off the rest. If you got to get a second job for a little while or a side hustle, get it and get out. Melissa, what is the minimum of liquid cash required to be able to enroll in your VIP class? There's not a minimum of liquid, cash that you would need to get into the mentorship program. Like, I had a question from a guy. We didn't get, let me see if I can pop it up. We didn't get to it. This was the question that I got texted like a couple of days ago. So I got $5K to my name. What's the best way for me to get started with real estate investing? I said, invest in you. The first thing to invest in is you. So even if you're starting off with virtually no money, it's even more reason to invest in you first. You don't invest in real estate first. First, you invest in yourself. That's investing in education, knowledge, making sure you're protected. Think about it. If you don't have a lot of money, you even more than somebody with more money can't afford any mistakes. You can't afford it. So the first thing you have to invest in is mentorship, is knowledge. That's the first thing you have to invest in, because you definitely can't afford a mistake if you're starting off with 5K or less. So you got to get the mentorship first. That's the best thing you can do, because the mentorship is going to lock you in, and it's going to get you to the point where you're like, all right, I'm focused. I know exactly what deal I need to do. I know how to save up the money. I know how to get to the next level, and I'm not going to make the mistakes that are going to set me back. Because even at that level, if you're just starting off, let's say you saved up to 20K and you make a $10,000 mistake, that sets you back like 6 months. Now, pull out your calculator. If your average life expectancy is like, let's say 75, how many 6-month turns do you have left on the planet? This is real talk. I used to sell life insurance, so I know life expectancies from an actuarial standpoint. How many 6 months do you have? How many years do you have to be set back? You don't have as many as you think. A lot of you don't think about it. So you have to invest in you first. And there's not like a necessary like a number in terms of like a minimum liquid cash. I would just say, if you're starting with less, focus on investing in mentorship. For some reason, people who are starting with less, they're like, well, I only have 5K, so I'm not going to invest that in any mentorship. I'm just going to put it all in real estate. I'm not stupid. And it's like, well, I don't know if that might be what we call penny wise, pound foolish. It might be a bit foolish to do that. There's only 2 things in real estate: knowledge and money. The less you have of one, the more you need of the other. So if you have all the knowledge, you actually don't need any money. That's the shocker. If you have a ton of real estate knowledge, you could go raise the money. You could go connect with the lenders. You could put the people together to make money. You don't need any money if you have the knowledge. If you have no knowledge or very little knowledge, then you would need a lot of money, right? You would need $1 million so that you can make $500,000 in mistakes and then get your knowledge up from those mistakes to then go and accelerate. So there's only those two things in real estate, knowledge and money. Less you have of one, the more you need of the other. So if you're starting and you're looking at your bank account and you want to get started, you have very little money, you need the knowledge. You need very big knowledge. And the big knowledge is actually going to accelerate you. What it's going to do is going to feel like a setback. But realistically, even let's say it was a 4,000. I'm just going to throw out a number. Let's say it was a $4,000 setback. So it's like, man, that's going to be back 4,000. But I'm telling you, the play is to put yourself in a position to save $1,600 a month, or side hustle it. Maybe start wholesaling, and that's putting you at an average of about $1,600 a month. That's only setting you back like 3 months. But the knowledge, the mistakes from that knowledge that you can avoid, and I've seen people set themselves back years, 2, 3, 4 years from making mistakes. You will avoid that in terms of like monetarily and in the time value of money, having that time to keep investing and growing. I've seen people get locked into deals like this 200K guy that we're talking about, right? How much you think that set him back? So if he had to pour 200K into this deal because he missed some violations, that's now time, maybe a year and a half, where he had to take that 200,000, pour it into this deal because he made a mistake. Now he can't invest in these other deals, any other opportunities that are coming up. Like my boots on the ground members that just locked up 200K deals today in South Philly. Miss those opportunities, miss more opportunities because you're locked into this deal now. That's called a setback. But it's hard to get this through to people who haven't lived it or maybe don't know enough to really understand that, like some of the issues you can face. I hope I'm doing a good job of communicating it like now, but this is the value of actually learning the game. So the best thing you can do starting off with less capital is learn the game. Take the time. I studied for 2 years before I bought my first house. You don't have to study for that long. You could study for 2 weeks, tapping into the 100 Keys Masterclass, come out 10 years ahead in knowledge, perfect execution strategy, one-on-one mentorship from somebody who's done hundreds of deals, and just go out and start hitting singles and then hit a home run. That's the better play. You will make more money. My guy just said it. The money will come after the knowledge. That's how the money comes, after the knowledge, once you learn. And there's only 2 ways to learn: mentorship or School of Hard Knocks. School of Hard Knocks is 100 times more of the cost than mentorship. You choose. Some people will choose to take action and bet on themselves and jump and allow a net to appear. Others will choose the penny wise, pound foolish route, which is, no, I'm going to squeeze my money together, which is a scarcity mindset. I'm squeezing my 5K. I'm not stupid. And then they go out and make a mistake. You never hear from them, though. You never hear about these people because there's nothing to talk about. They're just out of the game. The only thing you will hear is real estate's a ripoff. Everybody's a ripoff. None of that stuff makes sense because they made a mistake. They don't want to tell you that they never got any knowledge. They made a mistake and they got wiped out of the game before they even got started. That's the truth. So these things happen all the time. I don't know what that difference is that makes some people really trust the process and jump and allow that net to appear. The only thing I know is the success stories that I get. Now, I appreciate you tapping in, Rochelle. I appreciate you tapping in. All I appreciate is the success stories, the text that I get. I got a text. I don't even know if I can show it because I don't want to show my guy's name. Let me see. I'm going to take a screenshot. Let me see if I can take a screenshot. of the text I got, and maybe I can block out his name. But I get these texts and I'm like, man, that's what I like to see. This is what I live for from you guys is just the feedback. That's today. You can see a little bit. It says today, 10:49 a.m. Good morning, B. Here's a good news story. Scheduled to close that 5-plex on the 28th. Boom. It's like, that's what I like to see. My people are out there taking the knowledge and they're running with it and they're getting deals. This is life change. This is generational changes. My guy has kids. He's got kids that are going to inherit these assets. So then the next generation is growing up with cribs and assets. And that's the impact I want to have on you. That's the impact. That's my gift for you. There is no price for that. For real. There is no real price we can put on that. On your kids waking up 20-something years old and saying, should I work for somebody or should I go flip cribs like my parents and make money off real estate like my dad or my mom? There's no price that can be put on that type of freedom. But outside of that, the real estate mentorship program is affordable. It's affordable. And there's some really expensive one-on-one mentorship programs out there. Mine is definitely the most affordable out there. And that's why I kind of laugh when sometimes people are like, "No, I'm good. Like, I'm going to kick the can." And I'm like, "Go. There's nothing. I already know what's out there. I know these people. There's nothing more affordable than this." So what you are is you're not ready to take action. It's not about any mentorship program. It's just you're not ready yet. And for some of us, we have to accept that. Some of us aren't ready. You're not locked in. It hasn't hurt enough yet. It hasn't clicked in yet. You haven't felt enough of the pain of wait. You haven't woken up on that day yet and be like, man, I'm still in this 9 to 5. Oh man, I thought that was going to work. That didn't come through. Oh man, I kicked the can. That didn't work out either. You haven't felt it yet. I felt enough by 27. I quit the 9 to 5 at 20. Geez, how old was I? I might have been 28. I was out of the 9 to 5. I was done with it. I had felt enough. I had seen enough. And I was like, this ain't for me. I'd rather fail. I'd rather fail out. Even in the school of hard knocks, I'd rather fail. And I meant it. And I took it to the mat, right? Like, you guys know, I went out and did 300 deals. I got battle tested. I got burned for 40K. I kept running through it. I'm not done yet. They got to take me out of this. Like, I'm of that attitude. Like, you could put me 100 men versus one on a battlefield, and I'm still charging with the sword. Like, you're gonna drag me out, on the shield. Like, it is what it is. And that's my approach to the real estate as well. They got to take me out on the shield. There's no shame to that. They're gonna have to take me out though in a body bag in this real estate game, because I'm going for it. It's all or nothing. There is no way out. The way out is further in. But these texts is like, man, people are getting it. People are executing. And that's why I interview these people who are having the success, so that you guys can see them. And maybe they'll be the inspiration for you to bet on yourself. Not bet on me, bet on you. The only reason to not join the mentorship is because you don't believe in you. Most people know that, like, I can help and that I know what I'm doing. They can just watch a bunch of lives, watch some YouTube videos and see. But what they don't trust yet is them. They're like, am I ready? Can I really do this? That's the burning question. Can I do this? Me, though. I know they have success, but me, that's what these people were thinking who got in. The only difference between you and them is the action. They jumped in. They bet on themselves. They jumped and allowed the net to appear. They said, I've had enough. I've seen enough of the 9 to 5. Enough. And then they went out, and some of these people 30 days later, barely, a couple months later, 6 months later, they wake up in the morning, stretch, brush their teeth, look in the mirror and say, who are you? I don't even recognize you anymore. Because they're more fearless. And they don't even have to text me because they know what I'm going to say. Because I say the same thing over and over again. So you guys definitely gotta, just get into this game. Like I say all the time, it's not about my mentorship program, even though this is like the program a lot of people are like, man, I wish I found you sooner because I paid $500 for some nonsense and I didn't even talk to anybody. I didn't get any results. A lot of people wish they found it sooner, but for those who are really tapped in, this is that program that can get you sending me that text saying, hey, Brian, I just got this 5 unit, or it doesn't have to be 5 units. Hey, I just got a single. Hey, I just got a duplex. I'm living in one unit, renting out the other. I'm living for free now. It's all a success. Every step is a success. The only thing that beats um, that fails to this is just not trying, not getting started, just not getting started at all. In the VIP program, don't let yourself be the obstacle. Figure out what is holding you back, what your fears are, and just talk to Brian on a Zoom and trust in yourself that you can quit the 9 to 5. Facts. It's about trusting you. I have the knowledge. How could I not have the knowledge after 300 deals? Go Google Brian Grimes, who's building Philly. I mean, it's there, man. Like, I've lived this thing. I've done this thing. You're seeing the results. You're seeing the people who are getting the results now. So it's not just, me, the talking head, which I'm happy to be. We'll do the ride alongs. If you guys want to get in Philly with me in the party bus and drive around Philly and see the tour and feel out the areas and walk through some shells and do that whole thing, we have that available for you guys. We got one-on-one mentorship, not just cookie cutter group courses for you guys as well. And we got boots on the ground program where we'll just build the house for you. And we got a deal analyst on staff for you, help you pull comps, run numbers, evaluate deals, do market research, build rehab budgets. What else do you guys want? Like, I don't know. If you guys want something else, shoot me a text. Say, hey, could you add this in? Could you add that in? And you guys know I'll keep adding to the course as well. Especially those of you who've been around for a year or two. The masterclass has grown in content and depth. So there's just a lot here. But jump and that net will appear. But you got to take the leap and you got to trust in yourself. Do you have insurance policies that will pay off all the debt on your BRRRR properties when you eventually pass in the future? Do you teach that stuff also? It's not a question I get a ton, but you can do insurance planning. I mean, I guess some don't know, but insurance was definitely one of my heavy backgrounds. I mean, before I quit to jump into the real estate game full time, I was working at an insurance startup called Policy Genius. It's one of the largest fintech insurance, like online direct to consumer startups in the world. And I was part of building out their call center, training all the agents. I was employee number like 20, basically. Little boutique startup in Brooklyn. It's now over 600 people and hundreds and hundreds of millions that they've raised, 500-600 million. It's probably got a multi-billion-dollar valuation now. And I learned a ton of stuff there and patterned a lot of my real estate stuff off of that. So you get a lot of that value, but you can get insurance plans put in place that could pay off your properties, if you die, and then set it up so the insurance will be paid for by the real estate rental income and kind of do some of that stuff. But you could do that. You could also just, leave your properties in trust and just have the trust own it. So even when you die, the trust still owns it. Your children are the beneficiary. And, I do have, insurance and life insurance and all that stuff. And all of you should, especially if you have kids, you should have life insurance, at least a term insurance policy. But I'm not here to give you like all of that. But I am like I said, my financial planning background would, result in me saying that. You definitely want to have life insurance. Life insurance does have a role in real estate. I can drop a section on that if we have enough interest on why insurance can be a good asset to have, especially permanent insurance where you can grow cash value, why that can be very valuable for a real estate investor. And it has a lot to do with asset protection. So the sergeant says, hey, Brian and chat, I'm just listening. See, being a fly on the wall, this is a good platform to just be a fly on the wall as well. Asking questions or just learning from other people's questions. You can learn a lot. What credit scores that are not over? I'm not sure what the question, is there, but definitely, I think the golden in terms of credit score is like a 680. That's like the golden credit score where you'll qualify with everyone. With a 640, you can still qualify with most hard money lenders. So you can still do some bird deals or some flip deals with the 640, because hard money lenders are a little bit more risk taking. You can still get in with the 640, but a 680 is kind of that, like anybody will take you. It's like American Express. It's accepted everywhere. So your question is what about credit scores that are not over 640? You just want to work on them. Watch my credit hacking strategies. I have a YouTube video on that, on how to boost your credit score overnight. If you're in 100 Keys Masterclass, we do like sections on credit, rebuilding your credit, how to boost your credit, the piggyback method. We give you our ebook, 101 Ways to Boost Your Credit Score. Credit in real estate is just something that you constantly have to keep an eye on. You constantly have to monitor it. I tell people all the time, they're like, Brian, I got perfect credit. I said, well, now you got a problem because you have to keep it. So now you have a worse problem than somebody with bad credit. When you have bad credit, you really don't have to worry about much because your credit's already jacked up. When your credit's perfect, though, there's only one way for it to go, down, right? Can't go up anymore. So now you have to keep an eye on it. You have to keep those credit monitoring services on and just keep an eye on that. And I found that credit's always just kind of going up or down. You just want to keep it above thresholds and kind of keep going there. Terrence says, do we have a set price for the mentorship? We do have a set price for the mentorship. There are people that, at times I think are a really good fit and can offer different discounts to, and I will at times, but no, we do have pricing on the mentorship. We do have pricing on the boots on the ground. But if you want to tap in or kind of learn about the cost of mentorship, just book a call, book a strategy session. We'll talk one-on-one about it and get you, tapped in. So just reach out. That's what I can tell you is the best way to go to get into the mentorship program. If you're interested, but definitely I will tell you, if you get a discount, take advantage of the discount. I recently had somebody like not, and then kick the can and come back, a couple months later. And it's like, well, you didn't take the discount. So I ended up paying, the full ticket price to get in. Not because I wanted to, but I just, out of respect for the people who take advantage of discounts or move quickly, if I make you a discount, I'm serious about it. Take advantage of it or don't. But then if you come back later, then it's, you pay the full price. So hopefully that helps, guys. I'm not sure if anybody else has any other questions. We didn't get through everything, but we got through a lot of questions. We got through the most of the market update, but I think sometimes it's more important to answer you guys' questions because, that's what we're here for, to be an outlet and a resource for you guys to accelerate. There's definitely some fun stories in this one. So watch this back, like, comment, subscribe, leave the comment that says I subscribe so that I can send you instant access to that free training, and stay locked in. For those of you who are on the hook, some of you are tapped into the call right now and you're still on the fence about the mentorship program. There's very little to lose at the end of the day. Mentorship is a fixed price. School of Hard Knocks, how much you're going to lose out there, that's uncapped, right? It's unlimited. You could get hit with a $200K check like that guy. You could get burned for 40 grand by a contractor. You're going to pay, though. You're going to pay more than the cost of mentorship. That I can guarantee you. So bet on yourself, tap in, get advanced, and you will at least save whatever the cost of the mentorship is. But typically people 10, 100x in profits, the cost of any mentorship program, not just mine, but the cost of any good mentorship program, I'll say, because there is some nonsense out there and there are some fakes out there. Some guys who've done 10, 15 deals and then figured, I'll start a mentorship program. They don't know anything. They haven't done 100 deals or 200 deals. They haven't been around the ropes Ask some of those people to build a house for you. Hey, you have a program like Brian where you build houses for people? And they're like, no, I don't do that. And it's like, well, I thought you were a master real estate investor. Wouldn't that be effortless to you? It's effortless to me. That's why I have a program where I build houses for people. But for people who it's not effortless to, you'd have to question how effortless, they're claiming that it is, right? So guys, stay tapped in. I hope this helped. If you're interested in the VIP mentorship program, just tap in and stay locked in. Appreciate you guys.